Silver doesn't collapse loudly, it doesn't crash screens, it doesn't trigger emergency alerts, it doesn't dominate headlines. Silver disappears quietly, and right now it's disappearing again. Not because investors are panicking, not because markets are broken, but because governments are preparing. There's a global shift happening beneath the surface of the financial system, and almost no one is talking about it. Silver is being locked away, not announced, not debated, not explained, just secured. And history tells us that when governments stop talking about a resource, it's because they're done sharing it. For decades, silver was treated as an afterthought, too cheap to matter, too common to worry about, too volatile to take seriously. Gold was power, oil was power, currency was power, silver was just metal. But that era is over, because the modern world doesn't run on gold, it runs on conductivity. Every solar panel depends on silver, every electric vehicle depends on silver. Every missile system, satellite, data center, medical device, and semiconductor depends on silver. And unlike gold, silver is not stored and admired. It is used, consumed, destroyed in the process of progress. Once silver goes into a circuit board, it doesn't come back. Once it's embedded into infrastructure, it's gone for decades. This single fact changes everything. Because consumption without replacement is not a market, it's a countdown. For years, global demand for silver has been rising steadily, but supply hasn't followed. Most people assume that if demand rises, production will increase. That's how markets are supposed to work. But silver doesn't work like that. Over 70% of the world's silver is not mined on its own. It's a byproduct. It comes from copper mines, lead mines, zinc mines, which means silver production does not respond to silver prices. It responds to the demand for other metals. You can double silver demand overnight and still not increase silver supply. That's not a flexible system. That's a fragile one. And governments understand fragility better than anyone, especially now. The global economy is shifting away from efficiency and toward resilience, away from free trade and toward strategic control, away from abundance and toward security. And in this new world, resources stop being commodities and start becoming leverage. Silver has crossed that line, quietly. No public announcements were made when governments began increasing strategic silver reserves. No press conferences explained why export restrictions quietly expanded. No headlines explained why long-term supply contracts suddenly replaced open market access, because this isn't about price discovery, it's about access control. When a resource becomes essential to national security, governments don't compete with bids, they compete with silence. The goal is not to drive prices higher today. The goal is to make sure no one else can get it tomorrow. This is how resource lockups always begin. First, demand becomes structural, then supply becomes constrained, then access becomes selective, and only at the end does price react. By the time price moves violently, positioning is already finished. Silver is now structurally embedded into the future. Green energy mandates alone require more silver than the world has historically produced at current rates. Electric vehicles require multiple times the silver of traditional vehicles. Military modernization programs are silver-intensive by design. Digital infrastructure, servers, data centers, AI hardware, all rely on silver's unmatched conductivity. There is no substitute at scale. There are alternatives in theory, but not in volume, not in reliability, not in cost. Silver is not being replaced. It's being prioritized. And prioritization creates winners and losers, long before the public notices. Most investors look at silver prices and see frustration, sideways movement, manipulation theories, lack of excitement. But markets don't price scarcity early. They price it late. Before scarcity is visible, it's managed. Governments don't allow panic around strategic materials. They smooth. They stockpile. They secure supply quietly, because panic disrupts planning. And planning is already underway. The silence around silver is not accidental. It's intentional. Consider this pattern. When oil became critical, strategic petroleum reserves were built. When food security became an issue, grain reserves expanded. And when rare earths became essential, export controls followed. Silver is following the same path, just without the headlines, because silver touches too many systems at once. Energy, defense, technology, healthcare. Announcing a silver shortage would be equivalent to announcing infrastructure vulnerability. So instead, governments prepare. They don't warn. They accumulate. This creates a dangerous illusion for the public, because markets still look calm, prices still look manageable, availability still appears normal, but beneath the surface, the flow is changing. Less silver is reaching open markets. More is being routed into long-term contracts. More is being removed from circulation permanently. This is not speculation, it's logistics. And logistics always lead price. The real story of silver is not about charts. It's about control. Who is guaranteed access when everyone else realizes access matters? In previous decades, silver scarcity caused explosive moves, but those moves were chaotic. Today's world doesn't allow chaos in strategic resources. It allows rationing, prioritization, quiet exclusion. That's the difference this time. Retail investors think in terms of buying opportunities. Governments think in terms of dependency risk. If your energy grid depends on silver, you don't care what the price is. You care that it exists. This is why silver is being treated less like an investment and more like insurance. And insurance is never advertised. The most dangerous phase of any resource cycle is the phase where nothing seems wrong. Because by the time shortages are visible, decisions have already been made. Factories get priority, defense contracts get priority, national infrastructure gets priority. Everyone else waits. This is why silver's true value is not measured in dollars. It's measured in availability during stress. And that stress is coming, not necessarily as a crash, but as fragmentation. Global supply chains are no longer trusted. Energy independence is no longer optional. Technological sovereignty is no longer theoretical. And silver sits at the intersection of all three. This is not a prediction. It's a transition. Silver is moving from abundance psychology to scarcity reality. Slowly, quietly, deliberately. The world doesn't need a silver crisis for silver to become unobtainable. It only needs coordination. And coordination is already visible to those who know where to look. This doesn't mean panic, it means awareness. Because the greatest advantage in any system shift is understanding it early. Stoic philosophy teaches us something critical here. You don't control the system, you control your preparation. Markets will do what markets do. Governments will act in their own interest. Resources will move toward power. The mistake is believing the past guarantees the future. Silver was cheap because it was overlooked. It was overlooked because it was misunderstood. Now it's understood. And once understanding changes, behavior follows. Quietly, there will come a moment when silver is no longer discussed as an investment. It will be discussed as infrastructure. And when that happens, the question won't be, is it cheap? It will be, is it available? By then, positioning will be over. This is not about hype. It's about recognition. The global silver lockdown is not a single event. It's a process. And like all important processes, it happens before permission is given to notice it. Those who prepare early don't need to panic later. Those who wait for confirmation pay the highest price. Silver is not screaming, it's whispering. And history rewards those who learn to listen.